Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Listen, there's a lot going on. We are officially in war, all right? So, on last night, I said this. I want to say about this weekend. All right, good people, I want you guys to listen. There is a saying, buy on bombs, sell on trumpets.
Okay.
I want you guys to write that down. Write that in the chat. Buy on bombs, sell on trumpets.
This is good already. I like it already.
And
we know what's happening. Come on, tell us about it.
And I want you guys to Google that. Buy on bombs, sell on trumpets. There is a ton of money. I've made a lot of money on that. It simply means that buy on bombs mean markets often drop sharply when a war or a geopolitical conflict starts. Right? There's an and to this. Okay? Sell on trumpets means by the time victory or good news is announced, the trumpets, markets have already railed. So what I'm saying to you guys, if you've been listening to me, I've been saying the attacks always happen on weekends. Have you noticed that, Josh?
Always.
They always wait until the middle of the night or weekends. Will it be a long war? Now, the president came out and said expect U.S. casualties and expect this to go on for a while. So now, if you're going to be looking to buy stocks and or crypto, you need a plan, okay? You need a plan. And that plan, for me, anything I say is not a suggestion for you to buy, hold, or sell. My plan is to disperse my money depending on what the charts show me. And you must be a stock picker, all right? So what I'm going to show you are some of the things that we're looking at. Major joint attack. The U.S., or should I say United States, launched major combat operations in Iran, joined by Israel. President Donald Trump, he posted a video on Truth Social, okay? So I told you that they are bombing, of course, they are retaliating against Israel, the United States on their bases, and the United Arabs. And what's funny was just last night I was making plans to go to Dubai. I was talking to some people in Dubai. And so now that's going to be postponed for sure. All right, let's keep it going. So I want you guys to look at this. We're going to go right through some things really quick on this Saturday. The longer the war, the longer the recovery, right? The shorter the war, the shorter the recovery. So we're expecting the markets to be down on Monday. Let's just call it. And Bitcoin has pulled back a little bit, but it could pull back more on Monday. Historical patterns. The pre-war dips. Market often experience a pullback in months leading up to conflicts due to uncertainty leading up to. On average, the market has dropped about 10%, right? So remember, leading up to. Initial reactions. Stocks typically drop around 10% in the days following the start of a conflict. 10% following the days of conflicts. Surprise attacks such as Pearl Harbor, you could see this, triggered sharper immediate declines, okay? But remember, that was Pearl Harbor. We're talking about the 40s, right? But here's what's happening. Rapid recovery. Despite the initial drop, markets often reach bottom within 19 days. Not 19 days. Not 19 days. Within 19 days, okay? And fully recovers losses within 42 days. 1 year after onset of war, this is the onset, the bomb part, all right? The S&P 500 has historically gained on average 11%, all right? So I got some, look at this, defense and aerospace. Companies like Lockheed Martin, Northrop, or Grumman, see, these are some of the ones that will go up, right? And energy, oil, the price of oil will go up starting immediately, and especially in the markets on Mondays. Okay, look at this. Small caps, historically, small cap stocks have tended to outperform large cap stocks during wartime environments. So when we talk about buying dips and selling rips, when small caps get beat down the most for you get swing traders, I want you to keep an eye on that. Now, let's look at this. So I got the NASDAQ and S&P, and I'm out a month. So as you can see, we've been whipsawing, and these are really big moves. But over the last month, we've been whipsawing, but we're not down to the lows of February 5th yet. The only thing that's close is the NASDAQ. Why is the NASDAQ down further than the S&P 500? Software companies, CapEx spends, big tech, Mag 7, they are all heavily weighted in the NASDAQ. Okay, so if you say, Larry, you didn't tell us what to buy. I just did. I want you to listen to everything I say so you can think for yourself. I just pointed to where you could be looking, and I'm going to point a little further. Okay, so now look at this. I want you to see this. We have big tech, Microsoft, Tesla, and Amazon. Year to date, look at how much Microsoft is down. Almost 19% already before the war. Okay, so before the war, it's already down. Tesla's already down 10%. Amazon is down, all right, year to date. But now let me add the NASDAQ. Let's see this. Okay, so as I add the NASDAQ, you could see year to date, the NASDAQ is only down 2.47% over the year to date. Okay, but the month, you could see Microsoft is down 7%, Tesla's down 4%, Amazon is down 13.5% to NASDAQ. So I'm going to just take Tesla out there because what looks good to me now is Microsoft and Amazon. Am I just going to load up? No, I'm going to go to the charts. So I want you guys to look at this. Here's Microsoft. Now, what I already had this line drawn here a while back. And as you could see, we hit it and went below on Microsoft. Now, what I want you to consider, anything I say is not a suggestion for you to buy, hold, or sell. What I want you to consider is just look at the 200-day moving average. So each candle is a week. And this is a moving average over the last 200 days. But I'm set to the weekly time frame. And as you could see on Microsoft, the last time we touched, this is not an exact science. This is not an exact science, but it's something to go by. So now the last time we touched Microsoft and touched again was 72% ago. Okay, that's on the weekly. Now, what do you want to look for if you want even deeper discounts? Go to the 2 weekly. Okay. The 2 weekly shows me what? Deeper discounts. That's what it shows me. So the last time, so if the market really, really tanks, if you look at the 2 week, I'm still on the 200-day moving average, but I'm on the 2 week. The last time it touched, look at that, was January 22nd, 2013. And we have went up 1,300% since then. So I'm not telling you to buy, but if things get really bad, and it may take a while, if things get really bad, what I'm going to do is play with the weekly, the 2 week, and the month on the 200 EMA, and it's simply going to tell me where to buy. That's what I like to do with moving averages. Let's look at Amazon. Amazon. Here we go. So I'm going to do the same thing. I'm going to go to the weekly, and we're going to engage the 200 EMA. And as we could see on Amazon, on the 200 EMA, we almost touched, but the last time we actually touched was in 23, right? And we are up 60% on Amazon. The last time it went way under, let's go to the 2 week and see. We could see the last time it went way under was back in the bear market of 2022. This was the bear market of 2022, and it dipped. Let's go midway. So on Amazon, you would be up 112%. Okay. And from that point, I am not selling. These are my long hold positions. So let's look at the Qs. We could see that the last time it actually touched was 2010 on the 2 week, not the 1 week. The 1 week we touched multiple times, but you could see ever since this was the recession, ever since the recession, the Qs, if you just bought the Qs, QQQ, as an ETF, every time it touched, boom. From this point to this point was 79%. From this point to this point was 204%. If you just stayed in, 263%. Look at that. 479%, 752%. If you just bought the Qs or loaded up on the Qs, okay? But there's shorter terms in between. And when I look for shorter terms in between, I simply go to the weekly, okay? And let's take this off. This is how I use EMAs to do my bigger load ups, should I say. And this is what I look at when I want to do shorter term buys. So I want to value cost average. I go to the 50 and I see how it hugs. You see how it hugs tight? And every time it dips under, that's when I do some enter buying. So from right here to right here is 140%. So this is how you dollar cost average, but you buy more on the 50 EMA on the weekly. And then Bitcoin, I'm just going to touch on it. I'll just tell you, just here on the 2 week, it hasn't touched, but on the weekly, 200 EMA, it's a good time to nibble. Now, I'm in my full positions, but if it comes down here, if it dips, and I'm just going to tell you right now, if Bitcoin starts to dip, say 18 to 20% under the 200 EMA, I'm going to start really, really buying. But if you ask me, you could start DCAing right now here under the 200. Larry, what about crypto winter? I'm just saying that if you are long, that's what I would be looking to do as Larry. You tell me what you want to do. So now I will also tell you this. I'm experimenting with the traffic trader on a crypto. So here I'm on the weekly, okay? And we are on Bitcoin, but we're on the weekly. And as you can see, this traffic trader is made for you to make money, enter. All right, whatever your time frame is, you're going to see traffic lights. It's not going to be one solid light because it also helps you to swing trade. So I'm on the weekly, and as you could see, it printed a yellow light all the way here, right here. It printed a yellow light. See this vertical line? It also showed you a crossover down here at the bottom, red light. See here? Let me bring that up on the weekly, okay? So here it printed a crossover and a yellow light. What? It was telling you, it's probably coming down. So it went from 122 all the way down to now. Disregard that long. right? Disregard that long. It could be right, but it's a longer time period. So just disregard that and follow the traffic lights, okay? But intraday, there are swing trades. So if we go to, I'm going to take this off, this EMA right quick. If we go to the hourly, you're going to see that for those of you that are leveraged swing trading crypto, the answer is yes. You could use the traffic trader on crypto intraday. As you could see, it took you, if you were doing a put, it took you from here all the way down to here. And as you can see, it's a reversal. Again, if it's under the lane, if it's in the right lane, it's bearish. If it's in the left lane, it's bullish. So we had a crossover here. Now on the hourly, we're actually bullish as crypto is going down. It did a dip, should I say, on the onset of war. On the hourly, we're printing a green candle. On the 30-minute, we're still green. As you can see, we're flaring out here, okay? On the 15-minute, we're still green, right? That may change for those of you that are swing trading crypto, right? That's the traffic trader. If you want it, not only do you get the traffic trader, but you get every single thing that we do in Money Moves. See, my room, everybody gets everything. If you join by hitting the top link below, or you will see a link here, then you get everything. Come and join and earn money with us. But Monday morning, we will be doing options and using this trading indicator, Larry Jones's traffic trader, because it's going to make us some money on Monday. Whether the market rebounds or whether it drops, we're going to make money. All right. Have a blessed and safe weekend. Listen, if you want to join now, study over the weekend and come join us as we do options Monday morning. Right. Have a blessed and safe weekend. Live, love, laugh, and learn.